both. Now, the debate is underway as to the role of super funds can play in nation building, but is there also a role for SMSF investors? Well, to talk us through that space, Frank Donnelly from MA Financial joining us. Frank, good to catch up with you again. So, yeah, there has been considerable debate about, obviously, super funds, the power they have because they hold so much capital at the moment, what they should be using that for. So what role is there in terms of nation building?
It's a good question, Andrew. I think the debate in this space is actually a little bit upside down, if you will. You can't really start by decreeing from on high where capital should flow. If you want to drive capital into particular areas, the key thing really is to create the right incentives that investors will respond to, and of course to remove any hurdles that exist for capital flow into the right areas. And that's got to be the starting point rather than sort of trying to gravitate capital without the right incentives in place. That said, for some of the areas that you're talking about, so driving Australian growth, particularly in areas like green lending, decarbonising the economy, or actually just funding business growth in response to things like a desire to localise supply chains in the environment that we're in more broadly, I think actually there's so much demand on the borrowing side and on the investment side for that type of thing that you'll actually see capital go there anyway, even without some of those incentives in place, that's because there's a demand for capital, but perhaps a shortage of supply unlocks attractive risk-adjusted returns.
All right, so I guess you could also access debt or equity, but just as far as, and I mentioned the SMSF holders there, how they get exposure to that growth funding.
I guess we're in a time of the democratization of markets, and a lot of people are talking about that in the likes of things like crypto or DeFi. But if you step back, those areas are nascent technologies, they're quite unproven and unregulated, so it's a little bit of the Wild West. But at the same time, a number of blue chip managers globally and in Australia are making available strategies that are institutional grade and really that historically were actually reserved for large institutional investors only. And they're actually looking to make those strategies available today to retail and wholesale investors. So I think that you're seeing a lot of opportunities for the likes of investors that you mentioned, self-managed super funds or Australian wholesale, even retail investors, actually to participate in funding growth opportunities in private assets, whether that's private credit or private equity, through vehicles that enable those investors with a relatively modest investment actually to access this asset class, which has a lot of tailwinds behind it for the reasons that we've talked about and in some of those secular thematics. Now, some of those opportunities to invest are things like the listed investment company structures that exist. They're traded on the ASX. Also, you've got direct fund access. I think probably the direct fund access is the way to go because you avoid the volatility that can occur and that we've seen in things like the listed investment trusts, given how thinly some of those are traded. And here you're operating in quite a regulated space under PDS disclosures with managers with really good track records. So I think it's an attractive place to invest, and it's certainly something that Australian investors are dramatically underallocated to when you compare that to their offshore peers, all the way from institutions to retail and high net worth investors.
And why is that?
Well, I think the reason is that Australians have had an affinity over the years for equities. We are a heavily retail investor market. There's a large mum and dad allocation to the Australian stock market. And also some of these asset classes, unlike other markets, just weren't available to the likes of retail or high net worth investors, certainly not self-managed super fund investors. And so it's the access that's being made available there, which makes it quite attractive. I think the other area is that funding growth in these areas, particularly if you're lending to this type of a thematic, has historically been achieved by essentially 4 banks in Australia, maybe 4 banks plus Macquarie, lending in these areas. So the private debt space has existed, but it's existed on the balance sheet of 5 institutions. Now, because of regulatory dynamics that are evolving, that make it harder for those kind of institutions, like banks, to lend into this space, despite the good economics that are available, and some of the access opportunities that we talked about earlier becoming available, there are simply opportunities to do that. And I think that what's going to happen over time, like has already occurred in North America and in parts of Europe, you'll see those asset classes move away from the balance sheets of major financial institutions and into more readily accessible markets through either private funds or even listed investment structures.